do you parse an earnings report in this chaotic, topsy-turvy market? Consider the case of Agco, the world's third largest maker of farm equipment. Here's a stock that's been pummeled ever since the market-wide peak in late January. And you can understand why. If you're worried about the impact of a trade war, Agco is the kind of company that could get hurt in a world where our country's disputes with the Chinese keeps escalating. And let's not forget the EU, too. Then this morning, Agco comes out and reports some phenomenal headline numbers. The company delivered a monster 23-cent earnings beat off a 12-cent basis, much higher than expected revenue, up more than 23% year-over-year, 14% on a constant currency basis. North American business, in particular, on fire, up nearly 30%. Even when you back out the positive impact of the weak dollar, management boosted its dividend by 7%. What happens? Stock actually gets dinged. It loses 2.4%. Kind of like what I said at the top of the show. It's just no one seems to be satisfied with anything. Okay, so the guidance, Agco only raised its full-year earnings forecast by 20 cents, which includes the 23-cent beat they just reported, meaning their guidance is pretty conservative. Does that make sense? Market being too harsh? Let's take a closer look with Martin Rieschenhagen. He's the chairman and CEO of Agco. Get a better sense of the quarter and where the company's headed. Mr. Rieschenhagen, welcome back to Mad Money.
Well, good afternoon, Jim. Pleasure, like always.
All right, Martin. Now, I am a little confused, candidly, like the market, because you had such an amazing quarter. I did expect that you'd be guiding up a little bit more, but you are conservative. That is your nature. But I shouldn't necessarily be reading from that guide that perhaps you think things are going to soften.
No, I think Europe is pretty positive. North America is back. Only South America is a little weaker. But I think that will change, because I know from the seed guys and the input guys, fertilizer and pesticides, that farmers are very active and that they're doing well. So I think it's all related to the subsidy program, which is basically that the state comes up with subsidized interest rates, which will publish 1st of July. And by then, I think the market will be very strong again.
We have cold weather in the United States. Some of the farmers are trying to decide whether they should use grow corn, which, of course, we have in surplus, or grow soy, but they're worried about China. It doesn't seem to be stopping them from buying equipment.
No, they don't. And bad soil conditions are very good for our high-tech equipment, so that is excellent. Of course, as you mentioned, we like free trade. We don't like all kind of protectionism. We don't like sanctions. We don't like customs. We want to do business all over the world, and I think we will be in a position to do that also in the future. The problem with China, for example, hitting back is not so much our problem, but it's a problem for the American farmers. So what the government does do right now, I think, is not really well thought through, and they're always surprised by the reactions. I hope they learn.
Fair enough. There you go. I mean, I think that they regard this as par for the course, that unless you take them on and our country takes some hits, you'll never win. Do you think that that is too zero-sum?
Yeah, I think it's stupid to believe that with this kind of protectionism you can achieve anything. That's maybe old people with old ideas, like Wilbur Ross, who doesn't know about business anymore. I know him pretty well. The guy seems to be sharp. He made money when basically Bush sanctioned steel. And so maybe he believes that this is good for the industry. I don't think so. The steel problem is related to overcapacities globally. And the steel problem here in the US is old-fashioned equipment, not efficient, lousy quality. So we need to do our homework properly, and then we are really good in doing business like we basically do.
All right, don't want to get back and forth in this, but I do want to distinguish that Nucor, I do not feel is like that. I hardly believe that you think Nucor is like that, but that's not where we're going.
No.
Right? I mean,
Nucor is a fine company, yes.
Thank you. Okay, you're covered 70% on your steel costs, as I understand it. You're not, this is not going to hurt you, what we're seeing right now, 40% increase year over year?
Yes, we don't think so. And we also normally price for inflation. I think we should be fine. It's all baked in. But let's say all the volatility which we see makes us being a little bit more cautious when you think about you mentioned that we have a conservative guidance. I agree. But let's say there are a lot of loose ends here. And we need to be a little bit, I want to be on the safe side.
Okay, Germany, UK, France, these are new to me, having you call them out. What is going on? Because those have been areas that I kind of thought would just be so-so.
Yeah, no, Germany is a very good basically, we are the market leader in all those markets. And so, therefore, they are important for us. We manufacture globally. We have super technologies, products, which with very strong brands in those regions. And therefore, for us, it's very important that Germany, France, and England are doing well.
Finally, do you you obviously have strong views. You said that you knew Wilbur Ross once at one time. How do you articulate? You are an industrialist. How do you articulate your views to this regime that we have in our country, or you just have to stand back and say, ouch, this is not the way I would do it?
I try to very politely raise my voice, but I think right now we have people in Washington who don't listen. They don't read, they don't listen, and they have a maybe not the brightest background, I would say.
All right, I will say that's definitive and not beyond that. Martin Rieschenhagen, Chairman and CEO of Agco. Great to have you on the show, sir. Really appreciate it.
Thank you, Tim.
All right. He's a free trader. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.